Hello guys, welcome to another market review. We're gonna kick off by looking at the hottest market right now, which is oil. And last week, everybody knew this was gonna open with a gap to the upside. But how do we get long this market or short this market when we have one of those massive gaps, just like we did? And during the review, last week's review, I drew these two different scenarios and I I put emphasis on how important it is to observe how the market reacts to the gap and the opening price. And it was basically about what's in these two scenarios. So on the first scenario, you wanna see a rejection from the gap. So that means price going lower and recovering the opening price. That's a pretty bullish sign, and that's what happened. And the better scenario was basically filling that gap. Then you want to engage short on any bounces you get, being pretty confident that you are not gonna reach the opening price. So we got the first and the bullish scenario, and as you can see, Monday was a down day, but we did not fill that gap and we started to grind higher. Around here, we recovered the opening price and push above it. Um, we also held above the weekly open and monthly open, but we lost it. However, you can see that at this point we are creating um, higher lows. And even though here we didn't make a higher high, we still made a higher low. So at this point here, we do make a higher high, and I basically don't see, in my opinion, long in here offers a better risk to reward, but the probability of the idea working out is much lower than if you wait for confirmation. But that's, every trader chooses whether doing things in one fashion or the other. But the way I would have loved to trade this was basically observing this bullish structure, this break of the trend line, and this candle here retests the weekly open. And at this point here, in my opinion, it is very high probability that the long is going to work out if you define the risk like this. Because at this point, we've made a new high and it really shouldn't go below this low. And also you save up a lot of time because you just basically engage when the explosive move is going to happen instead of being in this chop here, which can be mental it can be exhausting for your mind and your mental health when you're big um, in big positions. So if I remove all the drawings on oil, let's look at what we are preparing for next week. So right now it's hard to think of getting long on Monday because we're basically pushing into previous weekly resistance, and yeah, it's on a daily this is pretty clean. This zone here looks pivotal to me, but there's no reason to think that this couldn't break. I mean, just because it was resistance previously doesn't mean that we cannot push above it. My preferred scenario would be to maybe see this reject or even trade above, deviate, and then reclaim this, then this is our new lower higher low, and we can engage long. And I think then 110 around this area is a very um, reachable target, in my opinion, if we flip this zone. But I actually just wouldn't put the same size in this week when trading oil as I would have done last week or in previous weeks, because the meat of the move has already happened, in my opinion. This is like 30% in 1 week. So it would be pretty fucking weird to get another 30%. And, a lot more people are gonna engage in this, and pullbacks and sharp pullbacks especially are more likely to happen next week on the following weeks. Now that this has caught everyone's attention. But yeah, I mean, it could even make new highs, push about 120, 125. But again, um, I just wouldn't put the same risk behind this unless I see very, very good reason to do so. This is a very, very sharp and vertical move. So I really wanna see bullish engulfings on the hourly or the H4, and if price pushes down, I want to really see um, big wicks forming. So that means buyers stepping into that market, just like here or here. I found personally that the H4 is a very clean time frame when you want to trade oil, because these hammers they tend to form, and they tend to be quite clean, quite clean. And my opinion, they reveal the real intention of the market. So, you know, if we see this as resistance, imagine we push above it, we fail, we lose this zone, and then you see maybe a big fucking hammer form here. One of these candles. And maybe then we have a fucking bullish engulfing, right? Something like that. I mean, oh my god, my drawing is horrible. Then you push above it, hold, you get long. But also, I don't know if oil is gonna open with a gap um, today. We'll find out. But if it opened with a gap around here and starts pushing um, higher, and you have like a candle that looks like this, maybe, then pretty good reason to get short this market and target filling at some part of that gap, but at least the origin, right? So yeah, we'll find out. I mean, even though we've already moved quite higher, I expect volatility to remain high. So that's all I wanted to see on oil. Let's move on to gold, because this was another market that we mapped out, and we were pretty precise with our views. So I marked out this low, which in my opinion was significant. It was the last low before we broke lower into this massive leg. And last week I mentioned a very similar scenario to the one I've described on oil, which is, I mean, oil and gold were in different contexts right? Gold is into its all-time highs, while oil was oversold on the weekly and probably on the monthly. So it had a lot of upside potential, but gold doesn't or didn't. So you have to be careful when a market is opening with a gap into resistance. So that was the scenario I mapped out. Um, Even though gold was gonna open with a gap to the upside, I didn't talk about long in this market. I only mentioned the short scenario, and what I wanted to see was either just blindly reject shorting this level and seeing it um, fall from there, or if the market finds acceptance above this level, lose it. Okay, so close above the level, spend some time, then lose it. Then you get short on the retest. That was exactly what happened, and we didn't retest the exact same price I mapped out, but if you had shorted this low from this small distribution range, you would have had a massive trade. And your stop loss would have been on this high around there and target this. Notice how gold bounces from the weekly open. It tends to do so when the weekly open has offered a nice impulse from there. So similar thing happened last week, so 2 weeks ago. See this? So long in the weekly or monthly open, when it is untested and gold has moved explosively from that price, tends to be a free trade. So what's next for gold? Well, I mapped out this daily low here to be a pivot, and you can see how price has respected it. It was very clear resistance previously, and here it was used as support when we flipped it. Now it's holding price, but because it's touched that line so much, I think it's just more accurate to treat this as a zone rather than a level. And on the hourly, there's a lot of chop because this market failed to break um, below this. So because it deviated and didn't make new lows once it deviated, I think that it might want to rally next week into this low or maybe the monthly open. I think if it comes to the monthly open, it could be a short. So I'll be watching bearish price action here to engage in a short towards this zone here. But in my opinion, the higher probability scenario would be to see price lose this zone here. Then you get short on a retest, and then you are aiming for, I would say, the February monthly open, but around this zone here. It would be very good trade. But I think it's important to see this as our pivot and our zone, that if it's lost, it opens the gates for much lower prices. And I'm personally thinking about the February monthly open. Yeah, yeah. So let's move on to Bitcoin, because again, our analysis here was pretty spot on. Last week, sorry, let me get rid of this. So price was here last week, and I said, well, this is gonna close as a weekly bullish engulfing, sorry, weekly bullish inside bar failure pattern, because we were compressing in this range, and we swept these lows, these two lows from the previous weekly candles, and we closed back inside. So when you look at the daily, on the Saturday, we had this swipe, but we closed above, and on Sunday, we had a retest of the previous weekly lows. So when you replay this, our target was met, and our target was just the 71k level, and that happened pretty fast. I mean, the way to get long this market, in my opinion, was just buying a pullback into this area once we had this flush, because there's a great risk reward in my opinion if you're targeting this high or this one, and it's a no-brainer trade when we have a weekly bias with us. But you could have also gotten long on a breakup of the weekly open. You see this was all the price action we had, this all the price action we had below the weekly open. So you know, it wouldn't be pretty easy to just get long once we saw a retest and a H4 close above with a wider stop loss in case, you know, there's a swipe like this one, but you get the idea. So it was pretty disappointing what happened with Bitcoin in my opinion, because going back to the weekly time frame, this looks pretty bearish in my opinion, and that doesn't mean that I think that this is gonna go much lower next week, but it's a disappointment because we had a daily close above all the previous 2-week highs, and we did nothing with it. We've retraced all the move. Now we're back into the monthly open. So also this weekly, you know, because we've had this big week, I think there's a great chance that we feel some of it before we trade lower maybe. But you know, it was pretty disappointing. This price action here just looks pretty distributive. I wanted to get long somewhere around this area here, but you know, I saw price basically find resistance at previous week's highs, and here this one is support, resistance. So if you want to get long around this area, you have this one and this one as resistance level, so not a great idea. And yeah, so it just undid all the move to the upside. So pretty disappointing. And what's next for Bitcoin? Well, I don't know. It's still in a range, so we'll wait to see if it breaks in either side. I think this market had the potential to tap the 80k, and from there we would find our short towards new lows. But you know, we'll see if we get that. I think this is being very heavily influenced by the war, because there's a developing risk of sentiment on the market. So if the NQ and the ES are gonna go lower, then this is gonna get dragged with them. So you know, we'll see, we'll see. I think we need one more week of price action. But I already mentioned that if we broke below and we found a rejection from the range, I think that maybe this could be heading towards new lows, quite possibly the 50k level. But we'll see. I need one more week of price action to see if something meaningful develops here. So, that's oil, gold, and BTC covered. So, yeah, I wanted to cover the euro, my lovely euro. Well, let me get a drawing here. Yeah, this one. Sorry. Let me adjust. So, with the euro, I said something very similar. I knew this was going to open with a gap, and I said, watch for this scenario where we open with a gap to the downside. We reclaim the weekly open. We reject that gap, get below the weekly open, then you can short this market comfortably. If it then breaks below the yearly open, you sell the retest of the yearly open. And that was exactly what happened. I mean, it doesn't get much better than that. It was a 260 pip week range move for the euro, which is twice the average. So volatility is a gift, and yeah, this was pretty much what happened. I have nothing else to say. Once it broke below the yearly open, and you see this how this market can't even close on the hourly above the yearly open, and it just shits itself. I mapped out this area here and this one here as the targets, and I was quite surprised to see this. I mean, I never really expect, no one really expects a 250 pip move from the euro in 1 week, but weeks before we were expecting a move lower on the euro, and it kind of bothers me to see some people thinking that there were no reason to get long the dollar, and we did find reasons to get long the dollar. We look at the weekly 2 weeks ago, and we mentioned how there was a bullish weekly divergence. So are you gonna fade that? Are you gonna call for the dollar to move significantly lower when you have this weekly pattern in play? This was the reason why I think that the euro was probably going to break below the yearly open and target, sorry, oh my god, and target this areas here, because most inefficiencies, we had a bullish weekly divergence on the dollar, and we had most inefficiencies sitting lower. So it doesn't take a fucking genius to figure out that it is more likely for price to go lower. Even though all the macro research and people were saying the USD had to go lower, that it was the Trump administration's goal, blah blah blah. It was a pretty fucking crowded trade, and it was a moment for an unwind. So the euro now is in a very interesting position, because now a lot of people who were short the dollar have been rinsed and washed out. So now we're trading at a much fair price than we were trading before. We've closed these inefficiencies, and price could still move lower, but I'm just thinking of one scenario, okay? So bear with me. So now we have oil going higher. If oil sustains current prices or even moves even higher, does that mean that inflation expectations are gonna rise? If that happens, the bond market will push the US yields higher. There's no doubt about it. And that will probably drag the dollar higher with it. So does that mean that, the Euro USD has a lot more possible downside? It very well could be. It very well could be. I mean, this zone here on the dollar is pretty pivotal. So if the market closed above and held, I mean, yeah, then euro is going to go much lower. So watch out for this zone on the weekly time frame for the dollar. But when it comes to the next week on the euro, the market found support on this key daily zone. And now the market has attempted for 4 straight days to break below this whole zone here, and it couldn't. It couldn't. It doesn't get more obvious than this. Okay. So I think that the first part of the week on the euro should be bullish. So in my opinion, unless oil goes insanely higher, which would drag um, USD up with it, and therefore Euro USD lower, I think that you want to buy something like this and target these two lows here. Then I would be out of the longs. But the way I see price right now, because we've had such massive reactions from this support zone on a daily time frame, I think it is wise to expect range bound price action around between the yearly open and this zone. So I just want to find a reason to get along this. So let's say we open with a weekly open, we trade below, we reclaim it. I will get long around here. This is around 40 pips, 50 pips. It's good enough movement for me. And from here, I don't know if it will reject. It very well could. I don't know whether this means that price wants to head much lower, but I'm still thinking that it could, uh, retest the yearly open. And I think the biggest shorts and the high probability shorts, in my opinion, are around here. So if volatility picks up and we get price around here, I would be thinking about shorting. So, what I say is very simple because I see this as a range. So if it comes into either one of those extremes, just play the bounce, right? So yeah, unless we get a daily close below this swing low, I don't think the euro is gonna break below this area. But if shit hits the fan, and I think that this zone here, which we've been targeting for quite some time, will be hit, and this is a great area to get long, in my opinion. We have an untested daily level here before a massive bullish engulfing. So if this is hit, this is a great opportunity to find a long around this area. So that's my view on the euro, right? Again, if we didn't hold above here and this shit goes, then yeah, the euro USD is fucked and we're gonna go much lower. There's a lot of thinking around this whole war, how long it is gonna take and how that will impact inflation, the yields and the dollar and the policy from the central banks, whether they become hawkish or inflation just goes insane, which would put a bit on oil. But yeah, so that's all my views on EURUSD. And in the last, well, yeah, I wanted to cover GBP before I go, because even though it is a market that I don't like to trade, because I just think that it is not as clean as the euro is, especially around the weekly and monthly opens. It doesn't respect them the way the euro does, and that's my bread and butter play. We had this daily level hold the pound, and the pound didn't drop as much as the euro, and it's been significantly stronger. So this daily shows a lot of buyers stepping in. So this is not gonna get bridged before we move higher, in my opinion. So I think the pound is gonna hit this yearly open next week. So again, you wanna you wanna get on board any pullback you get, because we have such a strong daily bias with us. But yeah, it's hard for me to think of a way of defining my risk. So I'll be looking for specific price action patterns. You look at how this weekly was a pivot, very clear resistance. Even though we had an hourly close above, then we had a strong rejection on the next hourly candle. So if we drop a bit on the open and we hold the monthly, I think this is gonna target the yearly open at least, quite possibly even fill all this gap. But I just be careful around this area here, this gap, because again, the market can reject, and a lot of people can engage long very late, and they will be punished. But yeah, this is what I expect on the pound. And on the last place, I wanted to cover Euro AUD. I mean, 11 consecutive bearish weekly candles on this instrument. I just think that this is such a key zone, and the market is just bounce a bit from it, just like I expected it to do. So I've been quite insistent with this because I think this is going to provide a bit of a bounce, at least towards this zone. And now that we have war, EURAUD is an instrument that rallies when there's a recession fear, risk of sentiment, wars, all of that. So in my opinion, it is all just lining up pretty well. It is lining up very well because we have this at the mid of this massive range, the origin of this whole move, my magic trend lines, and it is oversold on the weekly. So I think that EURUSD is going to find a bottom here. I would be surprised if it breaks below the orange, this orange level. I mean, if we go back on the hourly, we have pretty good levels that haven't been tested. Look at this one here and this one there. If we move to the current price, you see how clean the price action was at that level. So if we come here, I'm gonna get long with a limit long, and I think this market then should be moving towards the 168 at least. Yeah, but again, everything could happen. I mean, AUD has been pretty strong, and it could break this zone, but I just think that there's, it's just at a point where you really don't want to get short EURUSD. This is a pretty good level as well on a daily, and of course this is just range lows. So if price, price could break from here and then do this, or it could just ignore this break below and then find a bottom around here. I don't know, but my best guess is that we're gonna make a bottom around here and then bounce. And from there, I don't know. Aiming for this is pretty conservative in my opinion, but it could very well target 172s. I wanted to look at AUD USD just for a brief moment, because even though the weekly candle doesn't look as bearish as the one on EURUSD, I think the daily time frame tells a very different story. If you look at the euro, you have a pretty well-defined zone where we've had a lot of buyers stepping in and shorts closing, and no closes below, no daily closes below this level. AUD, however, is just trading on a daily time frame up into this sort of range lows. And yeah, a lot of buyers have stepped in here, but I wouldn't, if I had to long one of these two, it would be the euro or the pound, not AUD. That's why I also think that EURAUD has to go up, because I think next week and the following weeks, AUD USD is gonna get hammered. AUD especially, the currency, because all these risk off flows are not good for the AUD. But yeah, we'll see. So those are my views. I hope you found them useful. Please remember, this is not financial advice. Probably should have said that at the beginning, but let's hope we can make some money next week. So see you guys.